All right. Back to work, back to work. Halloween's over. Weekend's over. We got to get to work here this evening. It's Monday evening after all. It's a new week. It's a new month. November the 2nd, 2020. The Halloween candy is still hanging around, though, somewhere here in the office. I'm sure it is, right? I'll be here for a few more weeks. But all kidding aside, though, great to be back here with you all. If you're tuning in for the first time, though, again, my name is Joseph. As always, welcome back to your nightly newsletter. My job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys and gals tonight. Lots to talk about on these charts. The charts are all prepped in the background, as you can see. Got the E-minis, we got the oil, and of course we got the gold on our radar for tomorrow. Where do we start for tomorrow? There's a little news event tomorrow. We'll talk about the plan for trading around that news tomorrow. Got a bunch of big ranges, got a bunch of big strong trends, got a lot of great setups we're watching for tomorrow. Before we jump in though and get this video going, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. That way you always get all the good stuff sent to you every evening. We publish this video every evening, so I want to make sure you guys always get that video. So make sure you subscribe. And if you have any questions, don't forget to drop those questions in the comment section below for me. And as always, if you tune in every evening, if you like this video as much as I enjoy making it for you guys, always appreciate you hitting that thumbs up button for me here. So thank you so much for tuning in. Make sure you subscribe, drop those questions in the comment section below, and thumbs up tonight if you guys enjoy the video here we put out every evening on this video newsletter. Enough of the introduction, though. Time is ticking. Got a big day coming tomorrow. Let's grab a look at the charts here first as we dive into tonight's video newsletter. Boy, where do I start ahead of tomorrow here? Gold, nice big bull run on the gold. Choppy on the gold. This one very specific entry pattern I'm looking for on gold in these choppy markets right now. It's a bull market. It's into a trading range. That tells me there's two basic types of patterns we're looking for. I'll be put together. We'll grab a plan on that here in a moment here tonight. Over on the oil strong run higher here tonight or today on the oil, right? Some news out of OPEC over the weekend really sparked a rally on the oil. I'll tell you, anytime I see a market move this far, this fast, there's always a couple key setups I'm looking for the following day. Three of them come to mind. So we'll break down my favorite setups on the oil here tonight. Get a big run up. We'll see what the plan looks like for tomorrow here in just a moment here. And then, of course, over on the S&P. The S&P is probably the most difficult out of all three of these charts tonight. It's a bit of a curveball. The bulls have it. But I'll tell you, don't underestimate the bears right now on this S&P. We're back inside the range. I'd like to buy. There's a lot of different ways we can trade this S&P, but be careful. The bears they're lingering out there, and I'll talk about why I think they are here in just a few moments. So messy chart on the gold. It's a range on the gold, a runaway market on the crude oil, as you can see, and tricky scenario here on the S&P. Before we jump in though and get these charts going here, I just want to make sure we quickly check the news here for this week, because we have what really could be probably the busiest news week of the year, of the decade, maybe. I don't know. I don't want to go that far overboard, right? But I mean, look at everything going on this week. There is a party going on this economic news calendar. Now, of course, tomorrow is Tuesday. I think you guys probably already know tomorrow is election day here in the U.S. Just a little detail there we probably should talk about. Now, I would be lying to you if I said I knew exactly how tomorrow would play out. You know, everyone has been talking about this unrest and violence and all this stuff. You know, honestly, I'll bet things go smooth sailing tomorrow. It just seems like everything's all up, and it just seems like every headline right now is preparing for lockdown, preparing for it's like it just seems so far overblown at this point that usually when everyone's saying, hey, look over here, usually the good stuff is down here, right? And that's what it feels like the news media is doing right now. It feels like they're kind of getting us going, hey, look up here, when in all reality the most important stuff is probably down here, right? That's what feels like is going on right now. So honestly, between you, me, and YouTube, I'm anticipating tomorrow to be a relatively, dare I say, uneventful day. This, of course, probably one of the biggest elections we've seen here in quite some time here, at least in my existence, it seems like. The most hoopla for it. So again, tomorrow, of course, is election day. I honestly, please don't get too, don't buy into the hype too much. Make sure you get your vote cast. Make sure you do your civic duty out there. But I don't anticipate, hopefully I'm right about this, but it just seems that there's so much just fanfare for this whole thing right now. It just seems like that would be a good reason why it's a very smooth and steady session. So election day is tomorrow. Now, that's just one of the 5 big news events that we have here this week. It's amazing that the election really isn't the biggest. It's probably the biggest news of the week here. As we go into Wednesday, right, you've got this ISM services number on Wednesday morning. That's the big news on Wednesday. So election on Tuesday, ISM on Wednesday. Oh, let's just toss in an FOMC announcement while we're at it, right? Thursday afternoon, we get jobs on Thursday morning and the FOMC announcement on Thursday afternoon. And no, that's not it yet. Oh, by the way, there's also the employment number on Friday morning at 8:30, which, by the way, is the biggest news of the month for the month. Well, again, I laugh because you will very rarely ever hear me say the non-farm payroll number is the least important news of the week, but it really is, because obviously the election takes precedence tomorrow night. ISM is a very big news report, but it's not by far not the major news. And then of course we got the FOMC announcement. The FOMC is interesting because whoever wins the election tomorrow night, right, that may alter some of what we see here on the Fed. So it's really kind of setting this thing up to really be a very exciting, right, kind of latter half of the week here. Jobs on Thursday and employment number on Friday. So again, election Tuesday, ISM Wednesday, jobs and FOMC on Thursday, and then coming in the last position, the employment number on Friday. So that's kind of the big picture of the news here that we have this week. As far as tomorrow goes, there's not a lot on the schedule. The factory orders report is probably the biggest scheduled news for tomorrow at 10 o'clock Eastern Time. But obviously, we'll be paying very close attention to any headlines. We won't start hearing about vote counts until late in the day tomorrow. By tomorrow night's newsletter, we'll probably start to see some of the numbers just start to trickle in here. Where the big splash may be is on Wednesday, right? That's where things may really get interesting. You probably get an email from your broker, right? They are increasing margins, right? Margins overnight, daytime margins, and they're also reminding you about what we call limits. So, if you're not with me in the trade room this week, make sure you familiarize yourself with your broker's daytime margin requirements, because they have been increasing. Everybody is anticipating for some huge volatility, and that's one of the biggest reasons why I wouldn't be surprised if this thing just smooth sails right through this election. Hope I'm right. Obviously, be prepared though for some extra volatility. So check in with your broker if you haven't got that email yet. But your broker probably emailed you over the weekend saying, "Hey, here are the new daytime margins, and here are price limits," right? Daytime price limits. That's a little bit too much for this email. Obviously, I'll be working with our clients tomorrow and the rest of the week in the trade room. I'll make sure I keep you guys posted on that. If you're not with me in the trade room though, make sure you grab your broker's email address and figure out and learn more about those. That way you know how to react if things do get locked down right here post-election day tomorrow night. All right, guys, and don't forget the trade room links. What I'll do is I'll put a link for you guys down in the description of this YouTube video. Grab that link, get registered as a new member. We'll be in our trade room every morning this week, Monday through Friday. We'll be trading the good, the bad, and the ugly. Tomorrow, though, shouldn't be a very difficult day here, right? Factory orders at 10 o'clock Eastern Time. And again, I think the big shenanigans will probably come right on that Tuesday evening into Wednesday. If there are anything, right? If there is anything at all, again, I would not be surprised if we don't see it. Again, grab that link. Come out and join me tomorrow. I'll put all the important links for you guys in the description of this YouTube video. Let's get over to the charts, though. Had to go over the news here. I want to make sure you guys knew what the news looks like here for this week. Back to our charts here right now. Got the E-minis, got the oil, and of course we got that gold right on our radar for tomorrow. I'm going to jump first tonight, though, into the S&P, right? S&P's probably the most difficult out of all of these right now. And the reason why I say that is because the most important takeaway right now on this S&P, it's a bull market into a trading range. However, and what does a bull market range tell us? A bull market into a trading range tells us buy at support underneath the range and use the pendulum swing right as the target. So we have a bull market into a trading range, anytime I see a bull market, and again, this is kind of the most important takeaway right now. Anytime I have a bull market into a trading range, there are two basic types of trades you want to look for, and those are failure patterns and breakout patterns. Now, we're going to look for failures below the range. We'll basically look for a breakout, pullback, failure. I call them failure patterns below the trading range. That's one type of pattern to look for on a bull market into a range. The second type of pattern you want to wait for is a breakout pattern. And most breakouts are going to have some sort of 1, 2, 3-legged move. I'll mark up the high, I'll mark up the low, and I'll buy the first test of that new hidden channel. So the most important takeaway on this S&P right now, it's a bull market into a range. You want to focus on buying below the range with a failure pattern, or you want to focus on buying that 1, 2, 3 breakout pattern. I don't try to buy the breakout pullback, right? Those aren't very reliable. I wait for the proof and I buy that first pullback after we see that proof. Those are the two basic components. That's the main kind of takeaway from this chart, right? Bull move up into a trading range, we go down, the bears fail, and we run back higher again, right? That's the kind of the key takeaway. The variable here, which I think is the most, which makes this one of the more difficult markets for tomorrow, is this strong move down. Now, why is that strong move down so important? Because anytime we see a strong move in one direction, we usually see another leg and a retest of that direction. So we have a strong move down this time. You'll notice the buyers are back inside that range. But that's why I said in the introduction, don't get too comfortable. This thing may make a run lower, and it would make sense, right? Because we have that weekend gap sitting right there at 78.25. By the way, what is a weekend gap? Weekend gap is it's a very specific term you'll hear me use. Whenever there's a gap between Friday's close and Sunday's open. Now, I'm not looking for little microscopic gaps, right? Like a 2 or 3 tick or even 2 or 3 points, right? You want to see a big wide open gap there. What that will do is that will act as a magnet for pretty much the rest of the week. So what I'll do is I'll lock that price down on my chart, 78.25. That will be a magnet as we go. And that really is what kind of throws a curveball right in on this chart here for us, because as we pull back now, right, if we do pull back, remember, what is the general idea of a range, right? General idea is buy with a failure pattern below the low of that range. It's great, right, when we go lower here, but if they try to make a run back down again, now what's my concern? My concern is if they try to run lower again, first of all, it kills rotation. And anytime you see a failed rotation, because we should rotate, right? We should rotate at least back up to retest the highs up here once those buyers come in, defend this low. When the buyers defend that low, they've got one thing on their mind, that's to go back up to retest those highs. So if the market pulls off and goes lower, what does that tell us? It tells us we've completely failed that rotation. And what that will do is that will give the bears a lot more confidence than they really need, than they have already, right? It gives the bears a reason to get aggressive. That's one big problem, or at least problem for the bulls at least, right? The second clue is the weekend gap. And so we know that acts as a magnet, right? Now, I wouldn't short down to it because we're too overall bullish right now, right? That's not the way we use a gap, right? We use gaps as magnets once we see evidence the market's going in that direction. You're never going to see me trying to sell, right? I'm not trying to sell into this area going, well, let's see if it goes back to the weekend gap. That is completely unrealistic, right? We're not going against momentum. What I want to make sure you point out though is if this thing does roll over here and go lower, it's going to be very bearish, right? It's going to feel very bearish. And because of that, there's one very distinct pattern I always look for. So if we do pull back on this, knowing what we know so far, knowing that we failed rotation, knowing that, yes, I do want to buy down here, but I'm concerned about the weekend gap. I'm concerned about momentum. I'm concerned about failed rotation. The best way to do this is just be patient. Let the sellers try a couple times. Let them try once. Let them try twice. And once I get those bears to kind of commit a couple times, I like to draw a trend line off those lows, find a support line, and buy up from there. That way, I'm covering my rear end, right? It's a bit of a CYA, right, type of entry, because you know that failed rotation is a concern, and you know that weekend gap is a concern. Again, I call these nested variations of those failure patterns, right? Failure patterns. Again, most of the time, I'm going to wait for the pullback. I'm going to wait for bears to get short, right? And I'll buy into those stop losses. But again, that's what happened earlier. If we don't complete that run and we roll over, now we're worried. Now something's changed. Something's wrong. And therefore, I want more patient. Now, you can probably imagine what the next pattern would be, right, as we go higher. My biggest concern as we go higher is I don't want to mess with these highs, right? That's the bullseye. That's where buyers want to get to. So if I go higher here, I can't just get long hoping the thing keeps going higher. There's a good chance you'll get long and it will come right back down, stop you out before running higher again. So I got to see a breakout pattern. Now, breakouts are really simple patterns. There's no real shortcut to them. You got to see proof. I want to see a strong move up. I want to see a pullback to the moving average, and you got to show me a real strong jump off the EMA. If I can get that 1, 2, 3, in this case 1, 2, 3 breakout pattern, I would love to mark up the high, mark up that low, and buy off of that low. Now, at first glance, the easy target overhead is this big measured move up there at 33.52. It lines up right around 56, which is a big level of resistance. I got that measured move by measuring that leg and that leg right there. So to me, it seems like this whole area up here, you got 33.64. That's that prior all-time high. That's kind of the pre-pandemic all-time high up there. So this area up here is very likely to be where these buyers are trying to get to. My big thing right now is I can't get too aggressive as this market goes higher. So again, two patterns I'm looking for here on the S&P. One is a nested failure, letting the bears try twice before I buy into their stop losses for that run higher, or a breakout, 1, 2, 3 breakout pattern. Find that hidden channel by that first pullback. First test is always the best test. And remember, guys, tomorrow morning, every morning, we'll do this together in our trade room. But if you're not with me tomorrow in the trade room, the next best thing is to grab our free trading classes. Our free course is great because you'll learn all the fundamentals of all of these patterns: failure patterns, breakout patterns, trap patterns. You'll learn all my favorites. So if you have to, pause the video and make sure you grab that free trading course link that is popped up there. Everybody loves the free course. You'll learn all the fundamentals of the setups. You'll learn my 3-step strategy, and I'll send you a lot of examples of how we apply that strategy to our favorite futures markets. If you're serious about your trading career and you want to get the most out of our time together every evening on these video newsletters, definitely grab that link that popped up in the upper right-hand corner. And again, I'll put all of the extra links you guys need down in the description of this YouTube video, so you can always grab them there. Now, one thing you want to be aware of tomorrow also, we haven't talked about selling this thing yet. How could I sell this market right now? Is it possible to get short? There are. There's really kind of 3 scenarios I'm looking for to get short tomorrow. Now, one, if the market runs higher and we take out these highs, because of this range, I can look for a short, what we call a crown reversal. Buyers try once, buyers try twice, a trap high. Now, this is an advanced pattern, right? It's a reversal. It's a reversal pattern, right? Simply put. It's called a crown reversal, right? If you're a relatively new trader on one contract, these counter trend trades probably not going to be the best fit. So if you get more experience, a little more money in your account, you can take 2 contracts, 3 contracts. That starts to be a better fit there for you. So I always tell my clients, if you're a one contract trader, we assume that's because the account is relatively small. You want to stick going with the momentum of the market. So this would be one thing you'd want to skip if you were really trying to build up your trade account. But that would be how you would sell off the high. I would wait for buyers, try once, try twice. Another pattern, which is probably the most reliable out of all of these, would be a 1, 2, 3 reversal. We get below the moving average, the bears hold the pullback, and they jump off the moving average. Now remember, it's not enough to just get a strong move down. A strong move down is not guaranteed to keep going, as we see from that last example. So strong move down is great, but show me you can hold the pullback and jump off the moving average. Then I can easily grab that low, find that hidden channel high, and I can now start to get aggressive at getting short off the high of that hidden channel. But the key is you've got to get momentum turning over first. Right? It's a 1, 2, 3 reversal pattern in this situation. Now, of course, once those bears get it, where are they trying to get to? They're trying to get back down to today's lows at 43.25, and then don't be surprised if they keep it going down to that big low from last Friday at 32.26, right? That'd be a great trade. I'd love to get that 1, 2, 3 breakdown, mark that low, mark that high, right? Get short. Take some profit off quickly at that low and leave a bit right to run down to that 26 from last week. The third and final setup for the sell side is the one that will take the longest, most likely. We've got to get down and go sideways basically around this weekend gap. If the market commits to a new range, and this could be around the gap there, it could be a little bit lower into a range down there, but if we see the market go lower into a range, what do we look for? We look for failures and breakout patterns. You already know the breakout, what it looks like, right? The failure pattern, though, if the market runs lower and starts going sideways, wait for the price to pop up, wait for buyers to come in and try to get long off the moving average, and we can sell right into those stop losses with a buyer failure pattern going lower as well. Again, this requires some patience. You'll have to wait for that range to go sideways there. So guys, there you have it. It's a bull market into a trading range. I think I've covered every possible scenario here, but I'm sure something will happen tomorrow. So obviously tomorrow morning we'll do it together. We'll update the charts and we'll kind of ride whatever wave we get tomorrow. Again, the next couple of days here should be very interesting to say the least. Let's keep going. How about some oil? Now, oil is almost a completely different market than the S&P right now, right? The S&P and gold are relatively similar. Oil, what's the key takeaway? It's a strong bull run. Right? And in fact, it's not just any strong run. It's one of the biggest really one of the biggest moves we've seen here out of oil in quite some time, right? A $3.50 move on the oil. Now, back in the good old days, that used to be an average day. Right now, though, that's a big move for the oil markets. We saw some headlines out of OPEC in the pre-market today. I believe they were delaying the production cuts, or they were extending the production cuts is what they were doing. But the bottom line is OPEC talks, right? Oil usually goes higher. It's a very strong bull move. Now, I mentioned earlier, whenever we see this much movement in one day, right? Usually the following day is going to be a range. Okay, and it's like it is very consistent. It's not just oil, it's every market. Anytime we see this much movement in one day, you have to anticipate a possible range the following day. Now, we just talked about what the plan is for a bull market, right, into a trading range, right? We just talked about this, looking for failure patterns below it and looking for 1, 2, 3 breakouts going above it, right? So that's going to probably play in here for tomorrow. The other scenario would be if we don't get a range, you really want to be patient for a deep pullback. Because as you can see, besides that move lower in the pre-market, there really wasn't a very significant pullback for pretty much the entire day today. And eventually buyers will they'll grow weary of buying this high and they'll want to buy at a lower price. Right now, the buyers are simply riding high on the momentum coming off that news event. So very strong run. Anytime I see this much movement in one direction, one session, the following day is a trading range, or we're going to have to get a lower price here to attract more buyers, because buyers are just simply not going, professional buyers are not going to want to buy this high. So again, we've talked about the range plan. The range plan is relatively straightforward. Now, I don't know where the range will be yet, but I do know to keep an eye out for it here for tomorrow. When I see a range, what do? In a bull market, find levels of support below the range, wait for a breakout, wait for a counter trend breakout, look for those counter trend traders. In this example, it's a bear, right? Wait for those sellers to commit on that breakout pullback and just simply buy into their stop losses. I call these 2-try failure patterns, and they are my bread and butter when it comes to a range with a bull bias. So we're definitely watching for that tomorrow. And again, the goal of this would be to get this entry pattern off of some support level, like a channel, right? Like a swing low, some support level below the range. If I can be even more specific, I want to see a strong signal candle closing above the moving average, right? So it triggers it in, right? And we'll go over the rules more specifically about this right here tomorrow in the trade room. But that's, again, that is one of the patterns we're watching for here tomorrow. Now, another one, as you probably can assume here, is that breakout. Now, again, this would revolve around us getting that range going sideways. Okay, then is it safe to buy high? It really isn't. You remember, this market is not just getting this trend started. This is it's 3 legs up, right? And oftentimes when you see a 3-legged move like this, you go sideways, right? We may see it run lower, failure, and then swing back higher with that 1, 2, 3 breakout, right? I mean, that would be ideal. That would be probably the best possible scenario for us, because we could double dip that thing, right? Grab a seller failure below the range, then look for that 1, 2, 3 breakout, 1, 2, 3 move. Again, I'm not going to buy the high of the move, right? I'm not going to buy the pullback in the middle of the range. I'll look to buy that pullback, again, once we get that 1, 2, 3 breakout pattern above the highs of that trading range. All right, so be aware. Those are the 2 patterns you're going to be anticipating here for tomorrow. Now, we may not get that. There's news, again, coming out of OPEC, So if the market keeps on grinding higher, what do? We wait for a range, right? Keep your eyes open for a range, right? Trade the plan accordingly. If the market grinds higher, then pulls back, right? What's the plan for a pullback? The plan for a pullback is I'm looking for what basically turns into a combination setup. A seller failure around the moving average into a bullish pullback combination. This is the setup I'm looking for if we get the pullback, right? The pullback, again, you want to find a support level because it's a trending market. It's a bull market. You want to find a support level. I've got my channel drawn on. You can see. I've got my prior swings here. You can see, right? Now, I'm not sure about a trap on that low, but I really like, as the market pulls back, wait for bears to get short off the moving average, buy into their stop losses, buy the pullback. We call these failure into pullback combinations. We see a lot of these patterns on the charts these days. I cover both of these in that free trading class that I mentioned, right, linked up in the upper right-hand corner. So definitely want to make sure you grab that. Now, there's one more thing I want to bring to your attention, and you can see that weekend gap here. It's the weekend gap. Right now, we may see, it doesn't look like this case right now, but we may see the market really take a dive into that weekend gap, right? It blows right through the low of the channel. It blows right through those prior swings. So that's definitely a possibility. Again, I'd like to see a pullback here. I'd like to get us below the moving average, seller failure into pullback combination. Usually that turns into a strength, into a trap. I don't want to get too far ahead of myself, but that's kind of what I always look for, right? I look for that failure pattern, pullback pattern, trap pattern. All of those setups are covered, by the way, in that free trading class, that free trading class that I mentioned earlier. What I want you guys to be prepared for, though, is if the market really dips, right? If it kind of comes back and kisses that weekend gap. Now, what's going to happen is whenever we see a strong move in one direction, you've got to anticipate another leg. And so before you just go buying aggressively here now, let those bears try once, let them try twice, right? We talked about this. These are called nested failures. Now, when would you use a nested compared to a regular failure? When momentum is a problem. If I see a real strong pullback, I've got to give those bears the benefit of the doubt. The weekend gap doesn't help either, right? I'll draw that trend line off the low, looking to buy off the trend line. There's a lot of variations to this pattern, I will definitely say. Sometimes we'll see a strong shot down. The market will pull back. It'll be a shallow first, go up, and then come back down for a trap low. That is kind of the same basic idea. Bears try once, bears try twice. So you can see there is a little bit of nuance to that entry pattern. But be aware, if it really shoots lower, gets into that weekend gap, think about momentum for those bears rolling over and going lower. And as you can imagine, right, that is what's going to happen if the bears take control. If we do see a strong move lower and the bears can get their hooks into this thing and jump, I'm not going to try to sell that first pullback, no way, but I will look for that short off the high of a new hidden channel every day of the week, right? This is a very reliable setup. Now, again, I would love to get short off the high. I'd love to pick the top, right? But none of that is very realistic. None of that is consistently profitable over a long period of time. As a day trader, we got to focus on probabilities, right? Probabilities are very low getting short right now. They're not as bad, but they're not very good on the first pullback. If we get this thing to roll over, though, yeah, now we've got that short as we go lower here. And guess where their final target would be? Yeah, down around that 33.65 area. So look for that rolling over and look for that short off the high of that hidden channel. Be prepared for a sideways range here on the oil. If the market keeps on grinding higher, if it pushes higher, for example, what I'll do is I'll adjust this channel up, right? So be prepared. We may have to adjust this channel and find a steeper channel to get that failure into pullback combination, right? That same kind of failure into pullback combination here. If this market keeps on pushing higher here, we'll know more in a couple hours here, and we'll definitely make some adjustments, and we'll do it together tomorrow morning in our trade room. By the way, where are the buyers trying to go here? There's a big level overhead. 38.28 is a level. I mean, I would imagine if the buyers really get what they want to go to 40. 40 is a pretty easy round number for buyers to look forward to, but they have a large distance to climb for that to be the case here. And all of this is pretty much on the back of a news announcement this afternoon or this morning. So this could, we may easily see it go sideways, pull back at a retest, and that might be all we get, right, for these bears tomorrow. So just be aware, be patient, and be consistent, right, with the strategy. All right, let's keep going here. How about some gold? Now, gold, I didn't mention this in the introduction, but gold is probably going to be possibly the most difficult market throughout the week this week, just because we have so much going on, and all of it will directly affect monetary policy, which affects the price of gold, right? Everything will affect the dollar, right? The election results will affect the dollar. The FOMC on Thursday will affect the dollar. ISM on Wednesday will affect the dollar, right? Jobs on Friday affect the dollar. So gold has potential to be a bit of a piñata, if you will here this week, getting whacked from all different angles here. And hopefully the candy will fall out there before the end of the week here for us. We all pick it up. But the gold, of course, right? Pushing higher. What's the key takeaway? Messy week, right? Not just the chart. Look at the chart, right? The chart looks like it's freezing cold and kind of shivering, right? As it's going higher here. That's one of the things I always kind of laugh about when I see gold doing this, and you can tell gold's a bit nervous. That's what it's doing, right? So what's the key takeaway? We're bullish into a range. It's a bull market, right, into a trading range. Now, we know how to trade these, right? We know how to trade these. We're looking for seller failures below the low, not just below the low, but at a what? At a support level. At a support level below the low. What else we look for? We also look for those, 1, 2, 3 breakouts. So that could be coming here on this gold, right? I think the most interesting part about this is that expanding triangle, along with, if you line up these highs off of that low, boy, this is a really nice spot to be a buyer. Now, that opens up a can of worms, though, doesn't it? Because what's the first thing that comes to mind now if we pull all the way back to that low? My big question is do we go into the range, go sideways, then make the move lower? If that's the case, momentum is not that scary, and I can look for a seller failure into a pullback combination, right? As long as that pullback comes below the low of that trading range, right? However, if the market just simply tumbles off that high, do you want to step in front of that freight train? No. And anytime we see a strong move in one direction, we usually see a follow-up leg. What's the best entry pattern when you see a strong pullback like that? It's called a nested failure, right? Remember, there's a couple variations of this. The one kind of the easiest one to learn, let the bears try once, right? Bears try twice, and you're buying into stop losses for that rotation back higher. So, again, be aware of this. We know the overall plan. It's a bull market into a trading range. I would love to get below the range, get a seller failure around support below the range, and buy it back up, use the range as a magnet. The problem we have, though, is we're not in the middle of that range any longer. We're now up above the range high. If this thing comes tumbling back down again, that's going to be a whole lot of bears involved. And so now we want to think about, okay, let those bears try once, let them try twice, and once they do, then I can pull the trigger and take it long from there. Or sometimes what will happen is you'll see it go up, shallow pullback, go up, right? Same basic idea. It's a nested failure if we come rotating off that high, right? I'm not so concerned, though, if the market goes back into the range and sits there for a while, then makes the move down. That momentum now will kind of get dried up a lot there. I can then look for those failure into pullback combinations. So buying underneath that low, very, very big part of a strategy here for tomorrow. And as you can see here too, right? And remember too, stay out of the middle. Right? Stay out of that middle. Now, there's a couple variations of this, right? For example, if you draw the channel a little bit tighter, right? That does not look bad at all. Now, you'll notice, though, there's one big problem, right? If we pull back here, we are uncomfortably close to that range top. So what's the concern here? The concern is if we pull back to the low of the channel here, it's still not a bad spot to be a buyer, but you've got to be very careful about who. Sellers. And you've also got to be careful buying too high, right? There's not a lot of proof at this point it won't hold that top and run lower. Okay, that's the danger of that shallow pullback. So how do we avoid that problem? How do we A, account for the bears, and B, account for that top? We look for a trap. We look for the bears to pull back, try once, bears try twice, and look for a trap entry. This is where traps really shine. This is where traps are necessary, for that matter, right? Now, why again do we wait for a trap here? We wait for a trap on a shallow pullback because A, we don't want to buy too high, and traps are the most effective way to buy as low as you can get, right? The second reason is you got to anticipate bears, right? Bears are going to see this failure, they're going to see this thing holding, and they'll try to short this. So let the bears try a couple times, look for that trap, right, on a shallow pullback. Okay, that's one, obviously a little more advanced tactic, but I want to share that with you because we'll definitely be looking for that right here in the pre-market and tomorrow morning. The other pattern, of course, is that breakout. We already have the strong move. We've got the darn pullback. All you need to do right now, gold, is jump. Give me some momentum here. We can mark up that high, we can mark up that low, and we can buy that first test of the low of that channel. Just make sure this thing really pushes nice and strong. Now, where are we trying to go here? 1913, 1917. There's a lot of open space overhead for the bulls. They would love to get this party going higher here. One more pattern before I go. One more pattern here. Strong jump up, shallow pullback, higher high in price. I haven't talked about this pattern yet. This pattern is always on my radar when it comes to breakouts. I try to save the best for last for you guys here. Now, if we do get that strong jump up, watch that shallow pullback. It'll barely touch the moving average. Then look for a higher high in price and look for that trap. There's one right back here. Strong run up, shallow pullback, higher high, trap low. See it back there? That's the exact same pattern. That pattern is what you're looking for going higher here. Now, you also want to think about, too, draw a trend line off the high, trend line off the low, and look for those hidden channel bottoms, too, right? Those are always great breakout patterns as we go higher. So now you've got a good detailed review of all my favorite setups for gold. Just remember, if we get back in this range and we go to sleep on us, stay away from the middle, buy low at support, buy the bull breakout, but again, be careful, wait for the proper breakout pattern. And again, I've covered a lot on this video. I know you guys can handle it, but I know it's a lot to cover here in a short period of time. So don't forget, the easiest way to do this is to come out and do it with us every morning in our trade room. It's easy to get started. I'll put the membership information. I'll put a link for you guys down in the description of this YouTube video. If you're on the blog right now, I'll put a big button for you to get registered below this video tonight on the trading blog. So grab that link, get registered for tomorrow morning's trade room. We open up at 8 o'clock. We'll be there all week this week. And of course, don't forget, call me anytime you guys have any questions. Right, I'm always here standing by to answer the phone call. Use that live chat on the left, live support on the right. Whatever it takes, get registered. Don't miss tomorrow. Don't miss the week of the decade, the century, maybe, if I could, blow it up a little bit more than it already has been blown up already. I'm kidding with you at this point, obviously, but a big week ahead of us, a busy, busy week. Follow the plan. And if you need a plan, right, to reach me, I'll be here in the trade room all week here this week. So keep in touch. Drop those questions in the comment section if you guys have any questions. I hope by now I've earned a subscribe and hopefully a couple thumbs up by now. And I'll see you guys tomorrow morning at the opening bell. If not, we'll do it again tomorrow night in the next edition of this nightly news. So that's it for me, guys. Have a wonderful rest of your day out there. Hope you all had a fantastic Halloween. My dentist loves Halloween. I had way too much candy over the weekend, so I'll be definitely trying to wean myself off the candy corn, right, going into this week in this week. But hey, had a great Halloween. Hope you guys were happy and healthy with the kids' weekend as well. Have a great rest of your evening out there. We'll see you guys tomorrow. Adios, amigos. Bye-bye for now.